Hello everyone. Today I'm going to be starting a series specific to the home buying process. In my previous video, I went through an overview of what the process looks like, but in this series, I want to break down each part individually and kind of go into detail to provide more guidance on each step of the way. So in today's video, I'm going to be talking about the difference between pre-qualification and pre-approval and why this is important in your home buying process. Before I get into the differences of pre-qualification and pre-approval, I just want to start by saying when you have decided that you're ready to purchase a home, you want to decide whether or not you want to go with a bank or a broker. And the difference between a bank or a broker, and when I say bank, this includes credit unions, this includes, your local bank in your city, whatever that looks like. Essentially, this is a financial institution. You have your banks and you have your credit unions and those sort of financial institutions. They have a list of products and services that are specific to mortgage loans, for example, that they don't really stray from. So when you go to these banks or credit unions, they kind of already have a set guideline on who qualifies for what. It's a little more strict than if you were to go with a broker, for example, where a broker is just an individual or a company that has a multitude of services that they can pick and choose from that fits your needs. The difference in terms of your bottom line is that a bank typically charges less because they already have the services on hand, whereas a broker charges a little bit more because they are going out there to find the best service or best product for you. I personally prefer the broker option because there is more of an incentive for them to find you the best product, and you can kind of build a relationship with your broker and get firsthand insights as to what's going on with your loan at any given point, versus the bank where everything is done internally. There's not really an incentive to get you the best product. It's just kind of a meeting their goals for them, and so this can kind of get lost in translation in terms of what's going on with my loan, how can you get me the best product? They don't really care for that. So my recommendation, based on what I did personally, is going with a broker. Yes, it does cost a little bit more, but at the end of the day, when you go to the closing table and you look at all the fees that that have gone into closing, it doesn't really make a huge difference. What really matters is that relationship that you were able to have with your lender and understanding of the type of loan products that you were able to get. So once you've decided that you are going to go with a bank or a credit union or a broker, next is to understand what pre-qualification even means. Pre-qualification is just as simple as you inserting your income and your DTI just based on the top of your head, and a bank saying, or your lender saying, okay, we can approve you for X amount based on this preliminary information that you've given us. And based on that, they will give you a letter, and with this letter, you can start shopping around for homes with your agent. A lot of the times, agents will require this document to show that you can actually purchase this home, so it's not a waste of time on anyone's part. So this way, this document will basically give you guidelines as to how much house are you looking for. Pre-approval, on the other hand, is once you found your house and this house, you figured out how much this house actually cost, now the bank can take this number along with taxes, along with your pay stubs, along with proof of income, those sort of things, and really understand how much house you can afford. To me, it's kind of redundant. I feel like the pre-approval process should be done up front. However, it saves banks and lenders a lot of time by doing it once you've found your house. Because once you've found your house, you're more likely to follow through with the process. So this is why pre-approval comes after the pre-qualification. So just because you were able to get that pre-qualification letter up front saying you can start shopping for $300,000 homes does not necessarily mean that when it comes time for the pre-approval process, let's say once you've had the house under contract, that's when the pre-approval process starts. This doesn't mean that the bank is going to lend you this money at this point, so just keep that in mind. Pre-approval and pre-qualification are just the bank's way of saying, we think we can lend you this amount of money, but once you get the actual home that you want under contract, we will go ahead and do our due diligence on our end and make sure that you can fulfill this financial obligation. In a later video, I'll go over what this looks like on the back end, meaning once your loan has been approved. This typically happens 21 days after you've even had the home under contract, which is why it's so important to have a financial contingency in any of your contracts that you have, whether you're a first-time home buyer, an investor, or whatever the situation is specific to you. You want to make sure that if you are using someone else's money to purchase a property, you want to make sure you have a financial contingency of some sort. I hope this video was helpful for anyone looking to purchase a home or thinking about it, or if you know someone that's looking to purchase a home, be sure to send them this video so that they can fully understand that a pre-qualification and a pre-approval letter do not necessarily mean that you have the house or that the bank is willing to lend you this money for the house. Just know that there's still a few more steps along the way before they can issue that money to you so that you can purchase your home. Thank you.